We've got quite a few questions to ask ourselves here in December wheat, and it's really getting a little late in the contract for trading the wheat, the December contract. But just from an analysis point of view, I want to point out a couple of bits. On a weekly, ignore all of these, just look at these two lines here, this one and this one. Now, they might not look much, but these might turn into be quite meaningful lines. This one just at the moment is around 600. Yeah, this one just at the moment is around 550, and they're both rising. So these may be hidden support in here. Let's not dwell on that too long, because we'll just get things will just get complicated. Essentially, we've come down, we've got this big rangy move, we've jumped out the top of the range, now we're bimbling around. Personally, when I now look at this, I'm thinking there. So I'm thinking that's a 0 point, so you've got 1, 2, 3. I'm thinking that this is a 4, and then the question is, if this is a decent bull market, this will be the 5. But it's not that clear cut. The 5 could come down here. It's still very, very possible. So what do? We put ourselves on alert, but we don't actually trade yet, because there is the potential for more downside. If we just zoom in again a bit here, and I take this point, take a line off of here, this flicks me down here. 550 and rising. Now we've just heard about a 550 and rising support line, and in the laws of physics this should happen, but there's a big caveat on that, and that is this point here and this point here, are they the two relevant points, or are they not? And that is a big if. So you don't just trade off of the back of what we see here and say, oh yeah, I'm going to sell it because it's going down here. This, no, you don't. It's just a possible scenario, and needs to be kept in the back of one's mind, to the point that you're thinking, well, I'm not just going to blindly put a long trade on, because we could go up. But we think we're in a bull market. Therefore, I'm thinking about something like this, and then I'd be turning it into a modified Schiff, and that's making this point here really quite interesting. We could be in business here, and if this holds, we're going to this center blue line. So that is 8.25 and rising by the day. But this has to hold first. So we're looking at around 670 here. So we're looking at what's about 50 cents, and your stop has really got to come in under here. Your stop's going to be 30 cents. It's not even a 2 to 1 to this first level, and honestly I wouldn't be using this as my projection, but for my risk reward I've got to start thinking that I want at least 2 to 1 for my initial stop point. You could start looking at these, but if we turn, then I think these will be toast pretty quickly. And really, I'm looking at this thinking, let's get rid of this for a minute, just to make this clear. I'm looking at this level, and if it holds, I'm saying low, higher low, big space in between it. I expect new highs. Now, so that's 900-ish. If this holds, I expect new highs. In wave theory, you'd be thinking 1, 2. Great time to get involved because we've got 3 and a retracement 4 and 5 to come. So there could be a lot more in this. Our long-term cycle is suggesting end of first quarter 2011 that we could run to in a bull market. So there's the scope for getting involved here. But in terms of your initial risk reward, you should be looking at this central line here until we're through it, and then we can recalibrate upwards. But honestly, for a portfolio trade, if this holds down here, I'm looking for new highs. However, we could come down to this sort of level easily, so we don't want to jump the gun. So we're on alert, and what are we looking for? Well, there's a mini trend that's been going since this date here. When was that? That was 11th of October. It's been pretty sold. I would make a little minor trend line, and I wouldn't take the high. I would take the next couple of points and say, well, there's your trend. You could come down steeper if you wanted. This is just a personal preference thing. Sometimes some of these points can get a bit too squeezed. I might be somewhere like that instead with a 6x1, but personally I don't like it quite as much. But you could have either. Either way, you want one of those to be broken depending on your personal preference for the situation. Now, I'd be rooting for this one because they're both pretty steep. If you were mega aggressive, you could buy this 670, yeah, 670 bid, but your stop's got to go over here. Your stop must come in down at this level, 643, so you've got to be a shade under 640. So if you're absolutely itching, you could take this, but if you take this, you're guessing. You're still guessing a bit too much. What we want is break this minor trend and then come back again. This may put you in a bit higher. You'd be hoping for about 680 or something, but your protection is so much better at that point because you've got this confirmation that the trend is turning. We've got ideas. If we ran a trend line down here, you can see, yes, that's strong, and then there's the trend line there. We zoomed through it. We could come all the way back down here to double these lows. There's nothing wrong with that, and retouch this this trend line. So there are no guarantees getting involved here. That's why I'm looking for a guarantee. But certainly there's a first indication that we're going up. We're actually running down a different pitchfork. If I just put that one on, and we're running down this red line here, a little difficult to see. That's why I've left it off. But there is the chance of just support here, and we could just go up. But for me, it's another one that's on the radar. If we see a little bit of upside here, jump out to new highs and come back, it could even be in an intraday bar, then I'm going to be really interested in buying this market. But we're getting towards the end of the December contract, and we may want to roll it into by July next year or something similar. That's what I'll have a look at now, but in terms of analysis, this is quite interesting.